for listening to episode 265 of This Week in Real Estate. My name's Ray. I'm your host. We're broadcasting live Wednesday, February 21st, 2024. DOJ crashes, market meltdown, and Trump's $355 million fine will unveil the chaos. This episode was brought to you by listeners and viewers just like you. If you're enjoying the show, I appreciate it if you'd share the show to someone else. We just passed 7,000 subscribers. Woohoo! Shout out to all the subs out there, the new folks. We appreciate you guys following along with the journey. If you're watching on YouTube, then you can comment and we can display your comment. I can talk about you, or I can just talk about your comment. Olivier, he's in there. He says, bonjour. Bonjour, Olivier. Matt. He's in both places. Actually, Olivia and Matt are both in both places. So they're also watching on Clubhouse or listening on Clubhouse. If you're listening on Clubhouse and you want to add your voice to the show, you just raise your hand. As long as you have a bio, then you can actually add your voice right to the podcast. You'll be here in perpetuity. You can also comment live if you're on Facebook or LinkedIn. And drop in the comments if you're watching the replay. And let me know you're watching the replay too. I'd love to hear where all of you are from who are watching live. We have had some referrals recently passed around through the, almost said the B-More group. We've had some referrals passed around through the T-Wire group. So thank you everybody for tuning in. Without further ado, let's just jump right into it. Because I think this is probably one of the biggest news stories of the week for real estate agents and realtors. But my question, it may be a little bit different. It may be a slightly different take than what you've heard. The DOJ looks to penalize veterans who are buying homes. That's kind of a different twist, maybe, on something that you've heard. DOJ is intervening to the Nosalek lawsuit between NAR and Nosalek. Actually, it's not between NAR, it's the MLS pens and several real estate agencies and Nosalek, basically saying that buyer commissions should be completely decoupled. So this news story broke, it was either late last week or at the beginning of this week. But basically the DOJ proposed a settlement in the major antitrust lawsuit that might violate federal law and says the buyers should negotiate their broker's commission directly. Now, we'll get to why I say this penalizes veterans who are buying homes in just a minute. But basically what they're saying is in no circumstance should the seller pay a buyer fee unless it is part of the negotiation to purchase the home. So basically there shouldn't be anything offered up front. The U.S. Department of Justice told the judge in a major commission antitrust lawsuit known as Nosalek late Thursday to deny a proposed settlement between the plaintiffs and real estate defendants and called for rules that require buyers to negotiate broker compensation on their own. The plaintiffs and defendants, which include Anywhere, Remax, Keller Williams, Home Services of America, I guess you could just say the usual suspects at this point. They said that the proposed changes would eliminate the, quote, allegedly anti-competitive rule at the heart of the lawsuit. That is not accurate, said DOJ attorney Jessica Leal, who wrote in the legal filing known as the amicus brief. Far from curing the rule's defects, the proposed settlement perpetuates the very same competitive concerns that trouble the current rule. Leal wrote that the changes under the proposed settlement, quote, would not create competition or reduce commissions, and that it would provide, quote, no meaningful benefit to the sellers or buyers. Further, Leal wrote that the proposed changes could themselves violate federal law. So an amicus brief is when somebody has special expertise or special interest in a case, but are not directly involved in the case. They can file what's called an amicus brief. And you'll see like experts on certain subjects file amicus briefs about certain things. Sometimes not-for-profits will file an amicus brief in a certain case where they have interest. But basically they're saying that buyers should negotiate directly with their buyer broker to reduce the commissions. And it says, while some buyers may choose to pay their brokers out of pocket, other buyers may request in an offer that the seller pay specified amount of the buyer broker from the proceeds of the home sale. Thus, the current practice would continue where seller factors the commissions into the offer the seller is willing to accept. To address the anti-competitive landscape that would still exist if the proposed settlement was approved, Lil suggested a settlement that prohibits offers of compensation to buyer brokers by listing brokers. So I guess I kind of misstated. They don't want listing brokers to offer any commission to buyer brokers. They want only for the seller to offer that commission. If MLS PIN rules prohibited sellers and listing brokers from deciding what the buyer brokers would be paid, sellers would be responsible for determining only the compensation of their own broker in the listing contract, while buyers would be responsible for determining the compensation of their broker with the buyer broker representation contract. So here's where this gets really sticky and causes a huge disadvantage for people like veterans. Veterans by law are not allowed to pay a buyer agent. So in this case, there is no buyer agent commission to negotiate other than what you would accept, what the buyer, how would they negotiate that? They're not paying the buyer agent. So if you're not paying the buyer agent, then how can you negotiate how much they get paid? So now, if you have situations in which the only way the buyer agent gets paid is if there is an offer of compensation, and you have a veteran looking for a home, but there's big goose eggs everywhere for that agent, then doesn't this put the veteran at a huge disadvantage in their home search? Because basically we're saying that, well, you can only now buy homes where there is some kind of offer of compensation from someone. And that someone has to be the seller. It can't be a listing broker that says, hey, I'm willing to split my commission with you if you bring the buyer. Why is that wrong? Why is that impossible? If I say I would like to split my commission with somebody that brings the buyer so that it's better for this listing, it's going to sell faster, and it gives people like veterans, it puts them on an equal playing field with every other offer. Why is this a bad thing? What's up, Christina Smallhorn? She's here. Olivier says, yeah, how to make it a heck of a lot easier, eh? I don't think so. Very hard for first-time buyers to put a minimum down payment and to pay their agents. Well, and to pay the lender fees, right? In a seller's market, the sellers aren't even going to pay lender fees. So the problem right now is that there's not enough inventory. And so if you're in a situation that favors sellers and there's not enough inventory, then how could a situation which increases the burden on the buyer be good for the buyer because they're already struggling to find a property? And now you're wanting them to pay even more. It's already unaffordable for most buyers. And now you want them to either pay more. Oh, wait, they don't have to pay more. They could just not use a realtor, right? Okay. So now you have someone that's going up against somebody like me representing a seller. And I've been negotiating contracts for 17 years. I know the ins and outs of them. And if I talk to a buyer straight up and my fiduciary duty is to my seller, I am going to win that battle every time. That buyer is going to pay way more for the house than they probably should if they were being represented by an agent that had some experience. Matt, I saw you unmute. What's up, man?
Yeah, and so if I hear you correctly, and I think I do, it's probably time for us to continue, for some of us, polishing some of those negotiating skills, if you haven't already. But you know, this this is Washington math again. Like, those people don't know how to put a calculator together, do they? 1 + 1 still equals 3 up there? Is that how Congress and the Department of Justice, like all these people that have no idea how the real world actually works? So let's not get representation that, like, sorry, I'm getting a little heated.
Yeah,
Settle
let's take
down
those
now. Good.
let's take those people that can't afford representation and remove any opportunity that they would have representation, or
Exactly.
give them a huge disadvantage in the marketplace by forcing them to come out of pocket, or making
Right.
some properties completely unattainable. I mean, you thought
Yeah.
redlining was bad? Here, let me set up a couple of commission rules that are going to totally disenfranchise everyone on the lower end of the spectrum, or that quote, I don't want in my neighborhood, because I can just set up some commission rules that I know is going to take them out.
Exactly. Yeah, it's not already hard enough. Like you said, the inventory, again, just here in Atlanta, Georgia, I don't know what's happening in your area, but inventory is still ridiculously low. There's more buyers than there are homes. And so now we're going to, this is just so dumb. I'm sorry. I'm going to stop now. Thank you for firing me up on a Wednesday.
Well, I mean, it's going to keep going until you have somebody, to be honest, it's going to keep going until you have somebody that represents the minorities stand up and say, hey, you can't do this. It's going to keep, I mean, it's just going to happen. And so it's going to be pushed all the way through unless you have people that stand up and say, no, this isn't right. And people aren't going to listen to me. Average white guy in the middle of the country, who's going to listen to me saying, oh, that's going to, people won't be able to afford a house anymore that should be able to afford a property. Okay, that's true, but nobody's going to listen to me say it. What's up, Missy? How are you?
Hey, I'm good. I live in Northern Virginia, so we are like right outside of Quantico. The FBI Academy is super federal. I'm raising the freaking discrimination card. I mean, talk about putting these folks who take a bullet for us, who have been overseas a bazillion times, at a lesser advantage than they already have, because, oh, that's right, they don't have $80,000 to pull out of their ass, put down on a house. You know, they deserve every right and opportunity to use the VA loan. This is pitiful. I mean, and I don't know whether you as a lender or whomever is going to have to change their practices, or the VA is going to have to offer some exceptions for if somebody does actually have the money to pay for representation to be able to do so. I can't believe this ruling actually has come to fruition without any input from the public or the professionals. So I'm blown away by it, to be honest, too.
Yeah.
Good afternoon, y'all.
Hi. We've made Missy mad already, but she's here. What's up, Olivia?
I'm with Matt. I'm right on the same train. I tuned in to listen because I really wanted to hear your thoughts on it too, as far as what can be done. I mean, is there anything? I mean, what do you do? Our government's so screwed up already. It's pitiful.
Yeah. I mean, I think the only way to prevent it is to get some of these minority groups to say, hey, this is going to be a huge problem for us, because you're going to have some people that want to buy their first house ever, maybe even their first home in an entire generation or two or three, maybe the first home in their entire family, and their mom and dad don't know how to buy a house. And what are they going to do? They can go to ChatGPT and ask, okay, now what? Now they're going to go up against somebody that's a professional negotiator and pay 10 times what they should. I mean, it doesn't make sense. What's up, Olivia?
I'll explain how it works here, because that would actually be a very good solution. And it's only in my province. I don't know how it works in the rest of Canada, but we have buyer agency agreements here where I'll say, Ray, you'll pay me $2 to represent you. I'll use $2 to make it easy. You'll pay me $2, but if the listing agent is giving me $2 or more, you won't have to pay me, because I'll deduct the amount you owe me from that commission. But let's say the listing agent offers $1. In our offers, we actually have a schedule where it'll say, oh, by the way, I have a buyer agency agreement where I'm owed $2, but Mr. Seller, you will pay the difference between what your listing agent is offering and what my agent should be paid. And that will be deducted off the price that I'm giving you, so I can finance it through my mortgage. I don't have to get it out of pocket. I could pay it out of pocket if I wanted to. But for VAs, in your case, for veterans and for first-time home buyers who put the minimum percentage down, that don't have 5, 10, whatever amount of thousands of dollars that they have, well, then they have it included in the price they're offering. The only issue you have with that, imagine you have 10 offers with 10 different percentages. That'll be a nice Excel spreadsheet. But at least
Yeah.
then you have your buyer agency agreement, and the buyer's agent is getting paid what he wants from the seller, and the seller gets a net sheet included in the offer, and he doesn't have the right to negotiate that commission. So that's how we do it here.
The only problem is that this situation, it does not allow that agent to pay one of your dollars. What they're saying, what the DOJ is saying, is they don't want that agent to be able to pay one of your dollars. It should be negotiated with the seller.
But the agent is not paying the dollar; it's the seller paying it directly because it's in the offer.
Well,
pay. So
in this situation,
the seller
though,
says $0, but
in this situation, though, Olivier, the seller is having to pay both dollars. If your fee is $2, they're having to pay both $2. There's no split with the real estate agent who's listing the property.
well, that's fine. But so then he can pay the $2 to sell it.
Okay,
I mean,
but this
and
is
if he
what
doesn't
happens,
want
Olivier.
to-
I'm going to put it in very brass tacks. Okay. Let's say I have a pretty exclusive neighborhood and I like everyone that lives around me, and I want other people who are moving into this neighborhood to be just like me. I'm going to say, we're not paying any buyer commission. Okay. Now you have buyer's agents who are representing some folks who can't afford to pay their own buyer agent commission. And let's say my agent, I say, hey, we're not going to do that. It does not allow my agent to make up for that and say, well, then I'm going to split my commission with these people so that these people can buy the home. Instead, they're just out of luck.
Yeah.
So now that agent has to either get his people to pay, or those people can't buy in the neighborhood. So it's going to be a very easy way for anyone with a nefarious bone in their body to execute what they want and keep their neighborhood incredibly exclusive. So I think it's a huge problem. The whole point of splitting the commissions, where the seller pays one real estate fee and then the real estate agent splits that commission with whoever brings the buyer, a big driving force of that was to level the playing field for anyone. If you aren't represented, fine, you can come buy the home. If you are represented, fine, you can come buy the home. It levels the playing field so that anyone has a chance. But this is just an easy way for us to exclude some people and say, no, this neighborhood isn't for you. What's up, Jennifer?
Hey, I mean, there are a lot of drug dealers that make more money than me. And so if it really just comes down to affordability and excluding those that can and cannot afford, at the end of the day, you still have to be able to qualify for the mortgage unless you're coming in with a dumpster truck, right? So
yeah. So you could put some of the burden on the lender, you mean, to include agent fees in the loan?
Yep.
That's possible. I think that's a solution through a mess that could, again, level the playing field. And you're breaking up a little bit, Jennifer. Christina Smallhorn, she joins us on the YouTube text line. She says, you think NAR would be helping out on this? Isn't that what the dues are for? Oh, sorry. It was for a new logo and a tour bus. Was it a tour bus or was he driving a Harley? Wasn't he driving a Harley around? Riding with the
They
brand?
were giving the Harley away.
Oh,
yeah, they were giving the Harley away.
Gotcha. Yeah. Okay. They were giving the Harley away. That's right. Olivier says drug dealers are people too. Oh, man. All right. So this is interesting. Let's say if they plug the hole for the veterans and say, okay, we'll change the rules for veterans. If a veteran wants to pay their real estate agent fee to give them access to additional properties, they can. If we plug that hole, that's fine. The only hole remaining to plug is those who can't afford it, disenfranchised for whatever reason. And if we can figure out a way to include that in the loan, okay, but now their payments are higher monthly. So that also creates issues. I don't see that this is a smart thing for the DOJ. I don't see that it's anything that's going to change what buyer agents are paid. Are there going to be more buyer agents in the marketplace that take less? Yes, absolutely. There will be. So you're going to see an overall decrease, but are there going to be expert buyer agents that are the best negotiators that go above and beyond to find homes that are listed or unlisted, not on market? Is it going to replace those agents? No. I think those agents are going to get even more strong and have a better differentiation of services. So there's probably about, in the 80-20 rule, there's probably about 80% of the agents that will just take less. So it is going to, quote, lower how much a buyer pays. But I can tell you from a listing agent perspective, I love negotiating against those agents because it makes those buyers pay way more. All sellers care about is the net amount in their pockets in general. No? Yeah, I would say so, Olivia. That's what they're looking at. So is making a home available to fewer going to benefit? No, but have I gone to a listing presentation where someone says, I don't want a person of this color or race to buy a home? Yes, I have. Did I list the property? No. So there are still nut jobs out there. And that's what you have to protect against with stupid rules. Olivier says, I don't want any bearded guys in your neighborhood. It's just because it's a threat to your own manliness, especially as a Canadian, you know? Okay, speaking of NAR, the Wall Street Journal had kind of a hard-hitting piece against NAR. And so the NAR responded directly. Let's see, the Wall Street Journal stated that the brokerage executives across the U.S. blame NAR for failing to convey the gravity of the threat posed by the antitrust lawsuits, especially after the Sitzer-Burnett trial resulted in a verdict that led to a flurry of copycat lawsuits. Dozens of brokerages are now defendants, and more verdicts in favor of the plaintiffs could push many of them into bankruptcy. Meanwhile, NAR's response to the verdict has been less than reassuring. Their survival now depends on either successfully appealing the verdict or reaching a settlement that cost far less than the $5 trillion plus in damages. Wow. That's from that one case. But when the Wall Street Journal article characterized the trade association as, quote, hitting rock bottom, NAR interim CEO, Nakia Wright, hit back with a letter posted online. So let's take a look at the letter and break down what she says. It is, I thought I was sharing my screen. Here it is. So it's called The Real Story is the title of her letter. And there it goes. Okay. She says, this is a challenging moment for the real estate industry and for NAR. The real story is this. NAR recognizes the challenges of the moment. We're focused on moving our association industry forward. On the legal front, we recognize that the challenges facing our industry are complex and multifaceted. We're mindful of the profound obligation to guide our industry and organization going forward, especially in the ongoing antitrust litigation. The stakes are enormously high. Potential outcomes of this case could be a significant impact on not just the real estate industry, but on American people and the economy at large. NAR has a unique responsibility to consider these issues holistically, taking into account the complexities involved in how consumers buy and sell homes from the beginning. From the beginning, we have been willing to work with the industry, government, and stakeholders to improve our policies to ensure that they were the best interest of our members and the consumers they serve. You can learn more about competition.realtor. The tremendous changes we have undergone in recent months have sharpened our commitment to advocacy, culture, innovation, and education. What tremendous changes? Presidents leaving right and left for problems. From advocating in Congress to implementing new culture initiatives and instituting new leadership, we're committed to delivering value across our industry. I'm not really seeing, I'm kind of skimming the rest of it. We launched key initiatives to strengthen our organization to address cultural challenges, Cultural Transformation Commission, whose commissioners represent members, state and local associations, staff, NAR staff, and have gathered data across organization, how it's working towards producing transformative recommendations designed to shape and progress the future. I understand that they have to deal with a whole bunch all at the same time. One of the things that she said is during the Pandy, We work to protect the real estate essential service. So there were some states, if you recall, some of you may be out there, that they said, oh, real estate is non-essential. So you don't get to go to work. And they went to bat for us saying, well, wait, these people are essential. And so that was good. So they're listing some things like, yes, we've done some stuff. We're also supporting consumer interest by continually defending the mortgage interest deduction, access to credit, flood insurance, and the 30-year mortgage. In state and local communities, NAR collaborates with industry leaders to address issues that hit closest to home. Zoning rules in Wisconsin to opposing a harmful tax increase in Washington. So they're listing some things saying, hey, this is what we have done, which is good. But it wasn't a letter that instilled a bunch of confidence either. Christina said, did ChatGPT write that? She wrote a salad letter that said absolutely nothing. I mean, it kind of, Olivier said I'm on fire. It kind of, I really wanted to like this article. I mean, I really wanted to like the letter. I wanted to read the letter and come out of it saying, yes, this is the rallying cry. This is what we're here for. As a matter of fact, we just finished in our book club. Oh, and if you're not a member of the book club and you want to be in the book club, send me a message on Instagram. And my Instagram is Ray Zorback, RAYZORBACK, RAYZORBACK. Send me a DM and just put the words book club, and then you'll get to sign up. It's free for anybody. But we just finished going through building a story brand, and our next meeting Thursday is a story brand workshop where we've gone through the entire book, and now we're going to look at each other's stuff and say, okay, how can we make this more story brand? And I feel like NAR needs to go through building a story brand because they're missing what in the book calls like an offer above the fold that's quick and succinct and says, this is what we're about and this is why we're here. And as a matter of fact, in most of the marketing that they've done, they say, this is who we are, using the realtor R, but they show a bunch of different things. I would rather them say, this is who we are, and showing people like advocating for consumers on all these things, showing someone representing a buyer and keeping them out of a situation in which a seller is trying to take advantage of them. I mean, it's nice. The newest ad, I think we showed 2 weeks ago, had a buyer agent sitting down with the family and talking about the process of buying. Okay, that's good. But I don't think that's the rallying cry that an entire organization can get behind a buyer consultation. So they've kind of watered down their own message with these missteps in marketing over the last 3 or 4 years, where now they're in an identity crisis. And it used to be very clear what they were for. And now I think they're lost. So take themselves through the Building a Story Brand book, come up with this is actually who we are, and state it. Don't just say this is who we are and try to show some pictures of real estate agents doing business. Doesn't do anything. So state it very clearly. This is what we're about. This is what we're for. And this is who we advocate on behalf of. And give us something that agents can say, yes, if you do that, we're with you. If you do that, I'm not leaving. If you do that, I'm not going to go join AREA. AREA. If you do that, I'm going to pay you dues, and I'll be happy to pay you more dues and give you the RPAC donation as well. But you got to tell me what that is. You can't just force me to join because I have to join so I can be a member of the local MLS, and then put out ads saying this is who we are, and it's nothing I would get behind. Tell me, who are you? Maybe that's what we should do. Maybe as real estate agents, we should have our own campaign that says, who are you? And force NAR to come up with this is actually who we are. I know Christina said,
who are you? Is that what I just heard?
Yeah.
Who are you?
Who are with the realtor R? Who are you?
I know, I was kidding.
Yeah.
Who are you?
Who are you? It was definitely written by an attorney. I don't know if it was written by ChatGPT, but it was definitely written by an attorney. Okay, let me see if there's anything else in this. I think that's about it. BAM, Broke Agent Media had this article and broke it down as well. And they said the overall message was a focus on what we're doing now to improve NAR. There's really not much. There's, like Christina said, it was a word salad that was a response that said nothing. Full of sound and fury, signifying nothing. Oh, Main House Values. What's your name, Main House Values? Your photo looks familiar. He says Pete Townsend wants his royalties. That's good. I like that. Okay, the other piece of industry tea. We've been talking a lot about CoStar. CoStar is the owner of Homes.com and has been a major player in commercial over the years. Well, they just released their fourth quarter earnings and they've won again. Commercial real estate is up. Commercial real estate's up and coming portal warrior, CoStar, managed to maintain a long-running winning streak at the end of 2023 by growing revenue while also notching successes in its push into the residential space. In total, CoStar brought in $640 million in revenue between October and December, according to the newly published earnings report. That's an increase of 12% compared with the fourth quarter in 2022. Those results make the final 3 months of last year's company's 51st straight quarter of revenue growth. Now, I know what you're thinking. Okay, Ray, we've seen this before. $640 million, and they lost $87 million. CoStar remained profitable in Q4, earning a total of $96 million in net income. However, that is down from $124 million in profit the company earned during the final quarter of 2022. But this is this is one of the few portals, I think, that's actually making money. That's pretty impressive. So it looks like CoStar is going to be formidable. Rick Beal in Maine. Thanks, man. Thanks for tuning in. It looks like CoStar is going to be some pretty formidable competition for Zillow and Realtor.com moving forward. I wonder what those boardroom discussions are like. I wonder if they're saying, hey, we don't have to worry about them. Or if they're like, actually, these guys are serious. What are they doing? And how can we intervene? CoStar has come out flat out and saying, we are the real estate agent's friend. We are agent friendly. We think agents should win. We think agents are good. We're doing everything we can for agents. And all of their actions so far are proving it, despite what Christina experienced with the YouTube thing. They did say they stopped it. But where Zillow and Realtor has said, oh, we're totally for agents, but then they do stuff like take the leads and then sell them back to you. That action is a louder anti-agent move, I think, than CoStar's actions so far. Olivier said CoStar is selling such expensive memberships to commercial agents. Yes, but every commercial agent I've talked to said it's worth it. What CoStar sells. And if you've tried the alternate is Crexy. If you've tried Crexy, then it's about half price, but so is the experience. So is the data. They say they have more up-to-date data, but I don't know that it's more up-to-date. I've been trying to find comps for some properties on Crexy, and I'm like, I kind of want to test it on CoStar at the same time. All right, so that's it for the industry tea. We have a lot of economic news coming out as well, too. So this article was released today. It says mortgage demand takes a massive hit as interest rates cross back over 7%. We've been trying to figure out where that number is, where people can feel good about buying a home at a higher rate and feel normal about it. And I think we know for a fact now it is not anywhere near 7%. Mortgage interest surged last week to its highest level since early December and hit mortgage demand hard. The total application volume plunged 10.6% compared with the previous week, according to the Mortgage Bankers Association seasonally adjusted index. This quote is from Mike Frantantoni, Mortgage Bankers Association chief economist. He says mortgage rates moved back above 7% last week following the news that inflation picked up in January, dimming hopes of a near-term rate cut. Applications to refi dropped 11%, and applications for purchase fell 10% for the week and were 13% lower than the same week a year ago. So it's just down all the way around. Potential home buyers are quite sensitive to those rate changes as affordability strained, with both higher rates and higher home values in the supply-constrained market. But this higher adjustable rate mortgage share of activity increased to 7.4%. So the ARMs have been going up. And if you have to pay your own buyer's agent, that's going to go up even more. So 7% ain't it. 6%, it seemed like a lot of people were kind of coming back to the market, especially as it got to the low sixes. I don't think we experienced many fives recently. Maybe some situations did. But I felt like the market was really coming back about that time. Wait, I've got an ad that's going to autoplay. Let me catch it. Bam. You're welcome, Clubhouse. Clubhouse is the only folks that can hear the ads at terrible times. So there you go. But we do have one real estate expert. Is she just a real estate agent or is she a real estate expert? She seems sweet. Former $1 million listing Miami star, Debianacci. Real estate, Sam Debianacci. Sam Debianacci. I didn't watch the show. I don't know how to say her name. She weighed in on the current market and said that buyers should not be buying their dream home right now. Do you agree? Drop in the comments. Do you agree or disagree? Buyers should not be buying their dream home right now. She said because rates are so high or higher in general, people are trying to get a hold of all the bells and whistles, or people are trying to add all of the bells and whistles into their purchase naturally because they want to roll it in. They don't want to come out of pocket too much. And I think as a buyer, you need to maybe put your expectations aside. Don't buy the American dream right now, but think about the American dream home in the future. Olivier says, buy whenever the timing is right for you. Last week, the average mortgage interest rate, 30-year fixed, rose to 6.7. Previous week, 6.64. And now we just reported it's over 7 this week. Debianacci argued that potentially higher rates will follow residents into the hottest housing markets of 2024, according to Zillow. Buffalo, New York, Cincinnati, Columbus, Cleveland, Atlanta, Georgia, Orlando, and Tampa. In the cities on the list, the real estate experts further advised, quote, buy maybe your second home first. Buy the property that later on, if you can't make a big killing when you sell it, maybe you can hold on and you could rent it out and it will cash flow. I like investing in Airbnb markets. I mean, she's not wrong. If you have to finance your dream home, maybe it's not a great time. If you're looking to finance your dream home, however, if you can purchase a home and be in that home for years to come and take advantage of the appreciation that's going to happen when rates do go down, then I think it's fine. So should you buy your dream home? I would say yes, if you can afford it. Don't buy something you can't afford because it's your dream home right now, because if rates don't go down, you're stuck. And that's a very bad situation to potentially. So I would say if you can afford your dream home, buy it. Life is too short to live in something that you don't love. However, if you can't afford it, if you can't afford the monthly payments because of what's happening in the rates, well, don't buy it. Rick, I was thinking of Pete Townsend. Rick Beale said, ask those renters who waited because COVID would cause prices to fall. Ask them how they're doing. If you recall, Miss Susie Orman in, when was it? June? March? It was either March, April, May, or June. It was sometime in the spring, early summer that year. said, don't buy a house because the pandemic is going to create a situation in which homes are going to be half price. Your neighbor is going to sell for $150 and you're in a $300,000 home, thereby making your home worth $150. So don't buy a home right now. Wait until it goes on sale. And she predicted it would go on sale in December or November of that same year. That did not happen. It did not go on sale. There was like 1 month where inventory and everything dropped, and then actually probably like 2 weeks in reality. And then it's just skyrocketed ever since. So I haven't run the numbers recently, but I ran the numbers last year, and Susie Orman was almost 200% wrong. 200% wrong, because she said it would go down by half. And then if you do the math, it's crazy. So I think you have to look at the real estate experts and realize that maybe you should contact somebody local. Maybe you should look at your own situation financially. Christina Smallhorn said 50% off your home, laughing. Yep. Andy Rose is here. Well. He did say Atlanta and Georgia are different. Okay. Yeah, that $300,000 house now is worth $150,000. That's exactly right, Rick. So, ask to help make changes to the economy. Tell the DOJ to shut up, or at least give them your opinion. I have, Andy. You got here a little late. You know, I have to replay the first part of the show. I went pretty hard in on them. So yeah, let's see, what else does she say in here? You have to break crumbs at the table and really understand what your seller is wanting to do and learn the mindset of the seller. It's a matter of if they're trying to move out of the state, if they're motivated because they want a bigger home, and you try to work the emotions of the seller. Buying and selling real estate is all about strategy. So she's saying if you do decide to do it, you have to get into the mind of the seller. Some of that's overplayed. I mean, a lot of sellers are going to be looking at the spreadsheet. Yeah, I'm motivated, but if I can't make the move I want to make, I'm not going to sell. And right now, as we reported last week, luxury homes are keeping value because so many people are buying with mostly cash that luxury homes haven't really taken a big hit like some of the other properties. All right, so what do you think? Buy your second home first, or should you go ahead and buy the dream home? What are you guys advising your clients for? Drop it in the comments. Housing market activity is losing steam in January as mortgage rates stopped falling and prices kept rising. This is the big disconnect. Everyone was saying with higher home prices, with higher mortgage rates, home prices have to fall. And that's not a correlation in general. Some people said, well, with a recession and with inflation where it is, home prices have to fall. Also not a historic correlation. And I think a lot of people think this because of what we went through in 2008, 2007, 8, 9, 10, where you saw a negative 19% depreciation for the first time in history. They think, well, we lived through that. We saw that. That's going to happen again. It's like a once in a lifetime, maybe once in 5 lifetime event that happened. It's not going to happen again. So all the crash bros can chill. It's just not going to happen again. What is going to happen is in a situation where you have limited inventory, even with high rates, you're going to see an increase in home price because inventory is limited. The only thing that's going to cause inventory or that's going to cause home prices to level is an increase in inventory. And if you increase the inventory, then you're not going to see home prices go down. You're going to see home prices levelize. Why won't you see home prices go down? Because there's a point where builders slow down building. There's a point where development starts stopping. And that point is when people can't make money from it. So there might be a development in a town that doesn't make as much money as the guy had hoped. And I was like, that was a little too much risk for the low amount of money I made. So we're going to take a chill pill and let the market catch up to the amount of inventory that's on the market, and then we'll continue to build. You don't think that's going to happen? It did happen on an extreme scale in 2008, 9, and 10, where builders just stopped building because there was so much inventory on the market because of everything that happened in the financial markets. So take that less extreme example and put it in a normalized economy that we have now, and the ebb and flow of the market will dictate that home prices will not fall. There's been only one recession in history besides 2008 and 9 where home prices fell, and the amount that home prices fell was negative 1.9%. Every other recession, home prices increased 3 to 6%. So even in a bad or down economy, we're not going to see home prices go down. And people, I think when Christina was on the show, we actually talked about this. People saying that, oh, it was a better time to be alive during the Great Depression because you could afford a home. There were less than 40% of people owned a home back then. Now we're at 63%. Way more people own their home now. And we're also breadlines. We're not in those. All right, so let's look at this. Man, I am like cranky today. Cranky, right? All right, new listings dropped for the first time since June as pending sales growth slowed. Staggering mortgage rates and the biggest home price jump in over a year caused the markets to lose momentum. This report is on Redfin. I like the chart. Let me share this tab instead and show you guys the chart here. There you go. So it's an interesting chart as you look at the chart. Starts in March of 2012. At the new listing numbers, it was around, back then around 550K, and it went down and then started to go up. And then look at this. What I thought was interesting is what we just talked about with the pandy that happened. Look at the new listings in April of 2020. Look at that. Look at that. And then it goes way down. I mean, what number is that? Let me come across here. Less than 400,000 new listings that in that time period. Then it just skyrockets back up and it goes right back up to what we would call essentially normal, which is around the 600,000-ish number. Currently we're around 500,000. So we did have a dip in maybe July of last year or so, where it was less than 500,000, but now we're back over 500,000. We still need way more new listings, of course, to support the current demand, but it's interesting to kind of see the ebb and flow where we are, where we have been. Redfin says the pending home sales lost momentum in January, rising 1.1% from a month earlier on a seasonally adjusted basis. A marked slowdown from December's 5.1% jump. Still pending sales were at the highest level since September of 2022 and rose 8.8% from a year earlier. And look at this pending sales chart. It's like a squiggly line. It looks like a kid drew a squiggly line going all the way across the page, but just like there's a heartbeat in the middle. And that heartbeat that goes extreme down and extreme up is COVID. It's 2020. Whenever it was announced. Isn't that crazy? I feel like they should just kind of normalize that and gray it out and just kind of draw a line across and just have this part of because it was such an anomaly. But I guess now we know if, this, what disease X or whatever is supposed to come. Now we know what to expect. Andy says, the real estate market helped pull the economy out of the recession because of all the industries we touch. That's true. And it's a great place to park money. Very true. But isn't that an interesting chart? Home prices posted the biggest increase in 16 months. So here's the home price increase. There it is. So this is the amount of increase. So the median sales price, a change in the median sales price, because some of you are saying, I thought Ray said home prices don't decline. And look, it's below 0% increase right there. So it's a decrease. A median sale price, as you look at it on a chart, it's whatever's in the middle. So when you have a decrease in the median sales price, it may just mean that more homes on the lower end of the market are selling than homes on the higher end of the market. If you have a huge increase in the median sale price, it could be that all the homes are starting to increase their values, or more homes on the higher end of the market are selling. And we know in 2021 partly through 23, more homes in general were selling in all markets. We know that from the numbers. And there was more demand than there was inventory. So that increased the sell price. I wish they had a stacked graph, though, because this is not saying, if you look at this, you have to think of it as a cumulative chart. Okay, so what I mean is, in 2014, home prices increased, or the median sell price increased 10%. Okay, the next year, in 2 years later, 2016, it says that there was a 5% increase. So it went down to 5%. But you have to remember that that's actually going up another 5% from the 10%. Does that make sense? So it's stacking, each year is stacking on top of the next. When you have a 10% increase this year and a 5% increase next year, that is a 2-year increase of 15%. So each one of these is exponentially increasing as it goes, which is why real estate is such a great investment. But a chart like this is deceptive because this looks like a huge price decrease when it really wasn't a price decrease, especially if you take into account the cumulative effect of what happened to the pandy. When you've stacked these price increases on top of each other, then this little blip of a 4% decrease for 1 year is basically a normalization of the market at the time. And that's what we talked about at that time too. But that's when you see home price increases slow or home price gains drop. That's what it's talking about. So I wish they would redo this chart and show how it's stacked in home values from 2013 all the way to 2024. It would be off the charts and honestly would probably worry some buyers. But if you're already in the market and you can afford a home that you want, it should make you really happy, because that shows that even through a pandy, even through something that destroyed a lot of the economy, homes are still a good investment because home prices retain their value. Okay, let's go to another report. Canada. Olivier, are you still in the house? Yeah, you're here. So Canada, oh, look, I'm doing the thumbs up. Yay. There you go. Oh, Canada. Oh, man. I had a pun here for you. Let me see if I can find it. Canada is in a sticky situation. You get the pun, the maple syrup. So the economists say that there's a lot to like with the Canadian inflation data. Less than a month after calling Canada's inflation numbers, quote, unfavorable and disappointing, economists are now singing a much different tune this time around. On Tuesday, Statistics Canada reported inflation fell 2.9% in January. Do you guys split the word percent? Is that a Canadian thing? Is it always like that?
I don't know. I don't know. I write it in French, so I don't know.
How do you say percent in French?
No, it's not split.
It's split on the article. Isn't this interesting?
It is a typo.
She said it is a typo. PER space CENT is what they spelled out in the article. So that threw me for a second. Anyway, let's see. Pedro Antunes, chief economist at the Conference Board of Canada, told Bloomberg that this is great news for those that are looking at the band between 1% and 3%. We hit before, once before we got to 2.8%. He goes on to say, we're there again. Between 1% and 3% is the bank's target range. So this is really great news, actually. So what's this mean for you guys? The article goes on to talk about a divergence in the policy between...
Unknown caller.
Oh, sorry, hang on. Wow. I just got a call. That's one of the things I can't stand. Even though I'm on Do Not Disturb everywhere, sometimes it just rings. So I don't know. Anyway, the article goes on to talk about the divergence of policy between Canada and America, where you guys may be looking to lower rates sooner rather than later due to the inflation data. Is that what you're seeing too, Olivia?
So the big issue with that inflation report is it looks good, right?
Yeah.
But the two components that are making it still at 2.9% are housing at plus 6% and food. I think it's like close to 4%. I actually did a video on that this morning. So if they lower interest rates, they'll drive inflation up, and we're having affordability issues for apartments for renters here. And if you lower rate and you increase inflation on the apartment side and you increase prices in houses, you're creating an issue where people can't even find a place to live. So they're kind of in a sticky situation. The number looks good, but I don't think they can lower rate before the fall, because if they do, they'll stimulate demand, and it'll cause issues with people not being able to find apartments, or drive prices of home even higher, which will make people not be able to afford homes, because homes are pretty expensive here. If you compare it to the salary of people, it's a lot more expensive than in the States. So we're in a sticky situation. It looks good, but I don't think it's really that good, at least not yet.
Very interesting. So that's what most people are predicting for America too, is that they will wait till the fall before they lower rates, because if they were to do anything, even though our data is not as good as yours to support a rate drop, but if they were to do anything, it would overstimulate due to the lack of supply. Do you have a lack of supply issue there too, Olivier?
Yeah, we do. Breaking news.
I know, that was so annoying. That's the autoplay, man. Some of these websites have the autoplay.
Yeah, we do. And see, one of the reasons also inflation went down, I'll give you a few examples. They're like, well, they gave examples like shrimp is 5% less than last year. Airplane tickets are 10% less than last year. Well, yeah, if you can't get an apartment, yeah, you can get a cheaper plane ticket. And there's no apartments. We need to build over the next 10 years, 3 million houses or apartments. So I don't think we're out of the woods yet. And I think any rate drop will cause inflation and craziness in the market again. So I don't think they can really move for quite a while, or else they'll create a situation which will be as bad as in 2021, 2022, at least in the short term.
Very interesting. Yeah, I think you start to see luxury goods start to drop in price first when people stop paying for them. And I guess you could call seafood a luxury good. When I was growing up, it was kind of a luxury. But plane tickets, for sure, more travel. People are going to back up on their travel plans as they can't afford to do stuff. They'll take the staycation instead of the vacation. Speaking of, Olivier, did I tell you I'm going to be in Banff? I know that's probably far away from you, but this May I'll be in Banff. You should come to this real estate conference in Canada. I'll be there. We can meet up.
Yeah, it's like saying to someone that lives in New York, "Hey, I'll be in LA. Come and see me. It's right next door." Right?
Perfect. This is perfect. You don't even have to give a passport, man. You can get on one of those expensive plane rides and enjoy some shrimp in first class and come join me. Let's call it a callback. That was a good callback. All right, so let's talk about price growth. We've already talked a little bit about it. There's another Redfin report that just highlights that price growth is holding steady at the start of the year. It's another good chart, so I want to show you the chart if we can here, and you'll see what I was talking about a little bit about the price growth since 2012. So they basically did do the report that I asked for, in which they show a steady increase of home price growth. You can also look at the month over month or year over year. I like this new little thing they have here where you can adjust the metric. This is very cool. But the month over month national versus the year over year national, the red number is the Redfin index, and the blue number is the Case-Shiller index year over year. So you can see they are closely related, but the Redfin number is just slightly higher on the year over year numbers, and month to month, it's also slightly higher there too. It's also more volatile than the Case-Shiller index. So this very cool chart comparing their own number versus the Case-Shiller. I feel like the volatility though is a little more accurate. As a real estate agent, I mean, we feel that volatility from month to month. Where, whoa, it's crazy this month. Whoa, I'm twiddling my thumbs this month. Andy Rose, he said he thought it was lobster. And Olivier says shrimp is for poor people. Really? I must have been really poor growing up, man. Shrimp was it. We actually would have it every Christmas. We would have a big shrimp dinner because my parents used to live in Florida before I was born. And by the time Christmas came around, they were tired of turkey and ham. And we would have this huge all-you-can-eat shrimp boil at our house. And we still do that every single year. So it's got on the article, it's got was I sharing the chart? I'm sorry. Let me go back so you guys can see the chart. Here you go. So you can see how you can adjust it. This is what I was talking about with the adjustment. Isn't that cool? It also has a listing of the metros and their month over month change. So there's a couple with a little negative sign in front of it. Austin, Texas is one of them. Month over month, year over year, it's negative 5.3%. And San Antonio, Texas, negative 2.8%, which Trace Arano just did a video about people leaving San Antonio and why. So you have San Francisco, California with the month over month change that's negative. Sacramento, California is also in month over month negative. But for the most part, everybody is positive on the year over year price change. All right, next up, I'm going to have to go a little bit of a lightning round. Home prices and mortgage rates are pushing would-be buyers to the sidelines. Another article from Redfin basically combining the two charts that we talked about and then talking about its effect on home buyers, basically still making it unaffordable. So you guys can check into that article. There's not much else there. A weird article from realtor.com talking about squatters on the rise. And I can't help but think they saw the video that I had 4 million views about and thought, hey, let's do an article about squatters. It just because they mentioned the same guy I talk about, but they just do it in a different way. And I know like that's kind of a strategy is to talk about what's currently hot. How do I share this tab instead? All right. So here's the realtor.com article. When squatters strike, why squatting is on the rise and why it's hard to solve. Basically they're blaming the pandy on the increase in squatting. They said that, when you're renting an apartment for $800 a month and you come back from the pandemic and it's $1,800 a month, that creates a situation in which you can't do it. You can't pay it. And so people are just staying in the apartments. I think the bigger part of that is missed in the entire article was that there was a situation in which they didn't have to pay anything for 2 years. You remember that? Where your rent was like forgiven and you didn't have to pay any rent for 2 years. And so that would probably necessitate an increase for the person that owns the property that's been paying the mortgage. There are 1,200 properties currently occupied in Atlanta by squatters. Flash Shelton, who was the guy that we talked about previously, he's got a website now. It's called squatterhunters.com. They can be retained to clear home of a squatter. He says the situation has reached epidemic levels in Atlanta. Interesting. He said the people doing this know there are no legal consequences. They're not likely to be charged with anything. The way people are getting people out of Atlanta is with an intrusion law. Let me see if I can find that. It's basically been there since before the Civil War. And if anyone's intruding on your property, you can get them out with this intruder law or rule. So look that up. That's the shortcut to get folks out. Unfortunately, it's a legal game to play, and you want to comply with what's already required by law to be sure you have a successful outcome. Don't confront or try to turn off utilities, they said. When cops show up at these properties, they're encountering squatters who say they have a rental agreement. And then it kind of stops everything. They can't get them out because they say, oh, we have a rental agreement. One of the things homeowners and second homeowners and landlords are doing is installing security cameras. And if you see them break into the home, then they don't have a rental agreement. And so the homeowners are using the evidence of them breaking and entering as the fact that they don't have an agreement. So interesting time for the squatters. Donald Trump, he's fined $355 million in order to pay off who was harmed. Let me see if I can find it. No one was harmed. They accused him of inflating asset values to make more money. Scap the appraisers here. Scap, have you ever heard a property owner telling an appraiser that their property value is worth more than what you think it is?
Never. in a million years, there is no homeowner out there that is that stupid enough to try and influence an appraiser.
So this is why this is significant, because basically they're getting a loan against a piece of property in order to do another development. The bank says, okay, this property that you're going to put this loan against, how much is it worth? And Trump's like, $1 billion. And the bank's like, we don't think it's $1 billion. We're going to look at it with our people, and then we'll come up with a value. So Deutsche Bank came up with their own value and said, hey, this is what we're going to give you for it. It's not $1 billion. This is what we think it's worth. And Trump was like, okay, fine. And they did the development. And then Deutsche Bank and Trump made a bunch of money from the new development. Well, New York said that you can't do that. New York is saying that because he did that, and this is an oversimplification, of course, but this is the brass tacks of what happened. New York is saying that because he did that, he now has to pay $355 million for lying about the value of the property. But the value was double checked by the person that gave the loan, and the person that gave the loan made a bunch of money in the deal and is not upset about the deal and actually testified on behalf of Trump. This is why this is significant to real estate. This is done every day. If you're a commercial developer, this practice happens every single day. And if this is not overturned, then you are all in danger if the Attorney General does not like how you vote. So this is a big deal in real estate. Not enough attention, in my opinion, is being paid to it by realtors who are in the game. Maybe it is in New York, but it's definitely not. I haven't seen a ton of reports by real estate agents talking about this, but this is something that happens every single day in business, where a seller says, no, my home is worth $300,000. And the appraiser's like, nah, it's actually worth $250,000. So then the bank who sent the appraiser out gives the loan based on the bank valuation, and they may give even a little extra just because the person's good for it. But the bank doesn't bring the lawsuit, and the Attorney General can because they don't like the person that owned that property. No. This is a big deal. So if you guys are seeing this lawsuit and you're like, they got Trump. Oh, good. I mean, you may or may not like Trump. That part does not matter. Look at the case, dig a little deeper, because if it's the other side and they're looking at one of your people, then they can use this ruling, if it stands, to go after them. So there's probably a lot of things you could get him on, but this one, not great. Am I wrong? Does anyone else see this a different way? Because I dug in. I know I oversimplified it for the show, but I dug in as much as I could. And I was really trying to find something that was bad. Andy Rose, come on up, buddy.
I mean, they're literally wasting taxpayer money on this, because I think this gets overturned, because like you said, this happens almost every day in a lot of different transactions, right? The person who is selling is always going to think whatever they're selling or whatever they have is actually worth more than what the market thinks it is. That's true, just period.
Yeah. So you agree then? You don't see anything else in this? I really tried to look at this like with open eyes, saying, okay, what was the problem? But there's no one brought this lawsuit. There's no one that said, oh, this is bad. There was no wronged party in this lawsuit. And this is literally how developers develop. I think
anybody out there that's gotten a home equity line of credit, home equity loan, or pulled out equity, right, to do repairs on their home or their property, they're always going to think it's higher.
Yeah.
Right. So that it's just, to me, it's stupid. It's a waste of time and money. And it's really showing how politicized a lot of things have gotten. And it's not good, because this sets precedents, right? If this goes through, this sets a precedent, and it's not good for anybody.
Yeah. I mean, if you want, let's say you want the pool, you want to put it in a pool this summer. Okay, great. The bank's going to come to you and say, what is your home worth? And now you could be on the hook for saying that it's worth more than whatever appraiser they send out there says. Okay. Even though the bank doesn't bring you charges, even though the bank makes money with you off and you make money off the pool whenever you resell the home, everybody makes money. Everybody's happy. The buyer who buys the home is happy because there's a pull in it. Everybody's happy and satisfied with the situation. But because of your political leanings and you quote unquote frauded the bank on how much you thought your home was worth, they can now bring charges against you. That's what we're setting up. And that's why people need to open your eyes. I thought this article was funny. People are moving out of areas that stink. Not really. People are moving out of areas with poor air quality. Often because they're too expensive. So they're not moving out of the area because of the poor air quality. They're moving out of the area because the area is too expensive. I would also say there's a pretty strong correlation to the areas of poor air quality and political leanings. And we've talked about the migration of people who are moving out of areas that don't match their politics. And I think that may also have something to do with it. Let's look at the chart on Redfin. So you see the high risk and low risk numbers. People are moving out into areas of lower risk, basically. So high risk is red, low risk is blue. And you see the people moving out. It's negative 1 million people in 2021, 2022. And then you see a positive increase of 1 million people in the areas of low risk air quality. But, oh, sorry, you guys can't see that. Hang on. I'm sorry. I forgot there's a confirmation button I have to hit. And then there's a button to turn it on that I have to hit. So it's just a lot of buttons. Need a producer. If you want to volunteer to produce the show, let me know. There's a lot of pay in volunteer. No. All right. So here's the chart I was telling you about: high risk and low risk. The red is the high risk. And you see it's in 2019 and 2020, only negative 418,000 people moving out into areas, 523,000 of low risk. That doubled, basically, a little bit more than doubled, into almost tripled, actually, of the people leaving. Negative 1.1 million, 1.2 million to a positive 1 million going to low risk areas. So it's an interesting report. As you can see, the areas that were most affected, the share of homes at high risk of low air quality is in purple. So you see most of the West Coast is purple. There's a little pocket in Florida. What is that pot? What is there in Florida? Is that Orlando? In Florida, those of you Floridians, it's towards the top of Florida.
No, that's near the state line.
It's near the
That's
state.
near the state line. So you got Valdosta, you got Tallahassee.
Okay, what would be causing poor air quality there?
They do in South Georgia and North Florida. They've got a lot of farms, ranches, and
Oh, chicken and paper. Yep. I was surprised to see that New York was not considered poor air quality. But you can also see the wildfires. That's probably the leading cause of some of this poor air quality numbers. And but I mean, I have to caution everyone to read too much into this. We know that people are migrating around the country to do politics, but we also know in 2021 and 2022, people moved around the country because they didn't want to be locked indoors by whatever city they were living in. You remember the whole pandy thing? So it's entirely possible that it is not a causation, but a correlation, where you have people moving out of areas with poor air quality because those are also very populated areas and they were trying to get out of there because of the COVIDs. So just don't read too much into the numbers around 2020 to 2023. I think now we're more normal and we can start to read into the numbers more. Yeah, they're talking about wildfires, but I don't think it has anything to do with the wildfires, to be honest. Unless you had a survey of all these people that are saying, yeah, we're leaving because of the wildfires. I don't think it's wildfires, because you would think that people would leave Arkansas then for tornadoes. They would leave, Florida and New Orleans because of the flooding. But that's not the number one reason why people are leaving or going to those places. So, all right, well, That's the show for this week, everybody. Thank you so much for joining. I appreciate the discussion. I'm trying to find the outro. Let me find the outro. There it is. Aha, there it is. Thank you guys for joining us on the show. Follow me at Razorback, RAYZORBACK on Instagram and connect with me there. And don't forget, if you want to join the book club, send me a message on there and say book club. And then the whole automation will kick in and it will sign you up. That's every Thursday at 1 o'clock Central is when that is. It's 2 Eastern. What is that, Pacific? 11? 11 Pacific? 11 over there in Cali. So you can enjoy your lunch and a little book club action. We're starting a new book. It's going to be $100 Million Leads by Alex Ramosi. That's the new book we're starting not this week, but next week. Also, if you're going to Elite Retreat this weekend, Saturday, Sunday, Monday, and Tuesday of next week, let me know. I'll be there. I'd love to meet you. So come up and let me know that you listen to the show. That always does great things for my self-esteem. It makes me want to continue to do this show. So thanks everybody for joining, and I will see y'all not next week. There won't be a show next week. We're going to move the show time next week. So stay tuned for some info about that. I'll put it on Instagram there too.